All right, welcome back. So you saw that video. It sort of gives the introduction. You want to go into business. Where do you start? What business entity do you choose? You saw there's various types of varieties. I know the video talked a little bit about sole proprietors, but I want to add in my own verbiage as well. Sole proprietors is essentially, as the video showed, the owner is the business. It's where the individual simply starts providing the purchase or the selling of goods or services. For example, me teaching, funny enough, falls under a sole proprietorship. I'm actually selling my teaching ability towards Uni Latina, and they are purchasing that from me at a price. I get paid at the end of each month for the services I rendered. I get a direct check that's written to me. I'm in fact a sole proprietor of teaching skills and ability. And so that's how sole proprietorship works, is when an individual directly renders their services. A term you may be more familiar with is independent contractor. When you're not a full-blown employee, but you're simply hired to perform a job. Other perfect examples of an independent contractor is somebody who's picked up for a local job to fill in for simply a day. They're not hired by an employer for any certain amount of time. They're just simply hired for that time period. What can these be? Well, for example, babysitting is a form of sole proprietorship. An individual is hired to babysit a child for 3 hours. They're paid, whatever it may be, $10 an hour. And essentially they provide that services for watching over children. They're selling their services of child care. And so that technically is a sole proprietorship. Now, sole proprietorships are excellent in the way that they don't require any messy paperwork. You simply show up, you do the job, and then you get paid. But they also come with the issues of liability. Liability is directly attached to the individual. Since there's no corporate shield, nothing to protect them from liability. So if something goes wrong, let's say you're babysitting and the child gets hurt, well, for instance, the parents can then sue you directly for any harm suffered to the child, as opposed to suing your employer or suing the corporation that you're under. They sue you directly. You are directly liable. You have direct liability. Remember that term that we discussed earlier in the videos. And so, what are some ways that people may seek to avoid liability? We'll discuss those further on. But before we get to that, I actually want to talk a little bit about our next business entity, which is partnerships. Partnerships are much like sole proprietorships, except it's two or more people coming together to go into a business activity. Now, strangely enough, many states consider a corporation a person, so it can be two or more corporations coming together to form some sort of business activity can also be considered a partnership. Now, partnership works in the same exact way. Instead of getting paid for the individual, it's the partnership that gets paid. The partners then split the money equally. Each partner has a share in the management of the operation, and each partner has a share in the liabilities of the operation. So the key is to understand that a partnership is really just two or more people agreeing to go into a business activity together. Partnerships usually don't require any corporate filings either. The individuals are paid directly. They just split the income, and that income is then reported on their own personal income taxes. There is no partnership that pays the income tax form. That money is directly paid to them, and then they split it up, that money, and then pay it on their own individual tax returns. But once again, liability can sometimes attach directly to them. Now, sometimes partnerships will find it important to draw up contracts to decide the parameters of the business entity. And the book goes into the different forms and information that can be put into partnership agreements. But at the end of the day, the main thing to remember with partnerships is that it's like a sole proprietor, except it's two or more people coming together. You can have 2, you can have 50 people coming together to engage in an activity, and then those people are paid directly, and those people share control, but they also share liability. So we're going to take a quick break before we get into our final 2 items, which is a limited liability company and a corporation.